What do you need to know about taxes in Washington State versus Oregon? Today we're breaking down all of the important taxes you need to be aware of, even some hidden ones you probably didn't even think of. Hey, welcome back to the Living in Vancouver and Camas, Washington YouTube channel. I'm your host, Hannah Dubyne, and I'm grateful you're here today because we're talking about an important topic, taxes. It's definitely not a fun one, but it is something we cannot avoid talking about, and it affects all of us. And we get questions all the time on, should I live on the Portland side or the Clark County side? And what are the tax implications of each side? I've made this video before. I made this video maybe 3 or 4 years ago, and it's one of our most popular videos, most requested. So we're gonna refresh it with some updated and added information. By the way, don't forget to sign up for Weekend Happenings with Hannah, our weekly email newsletter we send out every single week to you guys with the best 3 to 5 local events. We handwrite it just for you. So we'll have that down below. And disclaimer before we get into this, I'm not a CPA, I'm not a tax expert. I'm a real estate agent by trade. So this is research we've done, but please consult your own CPA tax professional for specifics. All right, y'all, this is going to be kind of a long but really in-depth video. We've got 9 taxes to share with you, so we'll talk about the Washington side and then we'll talk about the Oregon side for each tax. The first, most obvious tax we have to talk about is state income tax. In Washington, there's no state income tax. Yay, that's awesome. In Oregon, not so much. Oregon works in marginal tax brackets, as you can imagine, and we'll put those brackets up right here so you guys can check them out. The bottom 2 brackets are 4.75 and 6.75%, but they're a very low dollar amount. So most people's incomes, whether they're single or filing jointly, is gonna fall in that 8.75 to 9.9% range. Usually when we're talking about state income tax, just on a high level, I kind of round up and say, you're paying about 10% towards state income tax. Now I know that if you're filing jointly, it's only what's over $250,000, or if you're filing singly, then it's what's over $125,000 that's taxed at 9.9. But you're really close to that 10, so that's kind of like the number that I use to estimate. So you're paying about 10% away to state income tax in Oregon. Next tax to talk about is sales tax. In Washington, your sales tax is going to depend on where specifically you're located. So there is a base level state sales tax, which is 6.5% currently. And then on top of that, there'll be a county amount and a city or local amount. We will put the link to the entire sheet that has every city and every county in Washington down below. The Washington government puts that out. Right now, the sales tax ranges from 7% to up to 10.5%. But currently in Clark County, sales tax ranges from 7.8 to 8.8%. 7.8% is what you'll pay if you're out in 𝐂𝐞𝐿, Amboy, kind of way out in the country. The highest sales tax area currently is the city of Vancouver, and they're coming in at 8.8% right now. There are some exceptions to sales tax. Groceries, prescription drugs, I would say are the 2 biggest. There's some other ones, I don't know what they are off the top of my head, but most things that you purchase in Washington are going to be subject to this tax. Over in Oregon, there is no sales tax, which is a huge perk. A lot of our clients like to live in Washington, and then when they make big purchases, they'll go over to Oregon to try and avoid that sales tax. Technically, you're not supposed to do it. I'm not encouraging it. You're supposed to declare those sales and pay that sales tax after the fact, but let's be honest, no one does that. It always catches me off guard still when I go to Oregon and I buy something and the total is like $100 even. I'm like, it's not 181, because that's what we're used to in Washington, but no sales tax in Oregon. The next big tax to talk about is property tax. Property tax is definitely a more complicated topic to talk about because it's not as cut and dry as an income or a sales tax. Let's talk about Washington first. The way property tax works in Clark County is it's going to be going off of assessed value, not sales price of the home. A lot of our real estate clients who come from, say, California, this kind of catches them off guard because they're used to paying property tax based off what they bought the home for, but that's not the case here. So your home's going to be assessed at a certain amount. Typically what we see is the assessed value is going to lag behind real market value, somewhere between maybe 10 to 25%. Of course, it could vary outside of that, but most commonly I'm seeing about 10 to 20%. From there, there's not one set property tax rate. It's not like you can just look it up like you can sales tax, depending on where you're at. But property tax here goes off millage rate. And so it's going to add together all the different districts that you're in. Of course, school district is a huge piece of this, but also water district. How about fire district? How about sewer district, special levy district? So you could be in one part of Vancouver and it's, 0.85 millage rate, but then you move slightly north and then it's 0.9 millage rate. So it really just depends very specifically where you're at. You can find all this information on the Clark County GIS, Geographical Information Services, or on the assessor website. If you really know how to use that, you can break it down and see exactly what dollar amount is going to what off your property taxes. But I usually round up and I say you're going to pay about 1% property tax. It's usually a little bit on the high side, but about 1% property tax on your assessed value. So I'll give you an example here. If you bought an $800,000 house, you're probably going to pay between $6,800 to maybe $7,500 a year in property tax. There are no major swings in property tax here in Clark County as well. I know that there's areas of Portland where you could pay potentially twice as much or half as much property tax just because it's a certain area. That's not the case here. The only times you're going to have major exceptions for property tax are if you're in timber tax status, you live on acreage and you're designating part of your land as protected forest, or you have senior tax exemption. Low-income seniors can apply to get lower taxes, but that doesn't go with the house. That's because of the person and whoever's living in there. Now let's talk about Oregon property tax. Oregon property tax, I'm definitely not as well versed in because we only serve real estate clients on the Clark County side. But from what I understand from my real estate friends over there and from doing research online, there can be really big swings in property tax. If you bought an $800,000 house in the Portland metro area, you're probably paying between $7,000 to maybe $9,000 a year in property tax. However, there can be areas where it's more upwards of $10,000, $12,000 if you're in maybe more of a high-end area. I will link the property tax guide down below for Oregon, but just know the biggest difference is really that you're going to have more of a swing in the Portland area, whereas in Clark County, it's a lot more reliable. The next hugely important tax to talk about is excise tax when you sell property. In Washington, when you sell property, whether you're an LLC, a trust, an individual, you're married, you're a corporation, doesn't matter what it is, you have to pay this excise tax. We will put the schedule up here so you guys can see exactly what those rates are. It works in tiers as well. Currently in Clark County, it starts at 1.6% of the sale price, not your proceeds, not your profits, but of the sale price, and it goes up to 3.5%. So that is a check you have to write directly to the state when you sell your home. In fact, you don't even get to write a check. Escrow just takes it. They legally have to withhold it so that you can't avoid paying it. So continuing with my example of an $800,000 house, if you own a house and you sell it for $800,000 here, your tax on that right now would be $13,295 when you sell. In Oregon, as far as I'm aware, there is no state excise tax that you pay when you sell a home. There is, however, a tax in Washington County that's taxed at $1 per $1,000. So if you sold an $800,000 house over there, you'd have an $800 tax. And my understanding is that buyer and seller share that 50-50, whereas in Washington, seller is almost always paying that excise tax. That is the default. Next tax to talk about is gas tax. Fuel prices are important, especially if you drive a truck or you're just driving a lot of miles all the time, you're commuting to work. Unfortunately, gas tax in Washington has gone up quite a bit the last 5 years. We had some major changes go into effect with the gas tax in Washington in July of 2025, and currently our gas tax is sitting at about 55.4 cents a gallon. I did some digging around online, and it looks like right now the gas prices in Washington are the second highest in the nation, with the first being, of course, our good friend California. Currently in Oregon, the gas tax per gallon is 40 cents. Next tax to talk about is estate tax. This isn't a fun one to talk about because it involves dying. Oof. But it is important when you think about your family lineage and what you're leaving to your kids or charities or whoever you want to leave it for. We'll put the tax rates up here for Washington State. You are exempt from paying estate tax on the state level for anything below $3 million. But once you hit that $3 million mark, here's how everything above that is taxed. And Washington is one of the worst ranked states for estate tax. You can see that those tax ranges go from 10% up to 35%, which is a lot of money. And I know you might be thinking $3 million, like who has $3 million to pass down to, their heirs after they die? There are a lot of people that have that amount of money when they pass away, and all things considered, $3 million is not really that big of an estate. So it is very common for people to have more of that $5 to $10 million amount. And I'm sure they'd rather see their kids have it, see their charities have it, than the state. In Oregon, there is also an estate tax, and the exemption in Oregon is your first $1 million. From there, the tax brackets go from 10 up to 16% versus Washington, remember, was 10 to 35%. So we're talking potentially plus 20% if you have a larger estate in Washington. Definitely do the math, definitely talk with your CPA if this is something you want to plan for if you're later in life, because it's going to be very situational. The next tax is capital gains. Capital gains tax in Washington at a state level went into effect not that long ago. I don't remember the exact year, but this was definitely a controversial one. We saw big names, big businesses move out after this change went into effect. You know, Jeff Bezos and Bill Gates and you name it, Amazon kind of moving out, moving their headquarters because they didn't want this to affect them. Capital gains tax in Washington is only on long-term capital gains, so anything held for more than a year, and it currently does not apply to real estate, though of course people are concerned it will open up to real estate in the future. Currently, your first $270,000 indexed annually is exempt from paying this capital gains tax, but after that, this is what you'll pay. We'll put the rates up here. I know that when this went into effect, and still kind of is very controversial, in a roundabout way, this is a bit of a state income tax, but just know that long-term capital gains tax does exist in Washington. In Oregon, there is no separate classification for capital gains tax. It's just going to be taxed as ordinary income, so probably going to fall on that 8.75 or that 9.9% tax rate. That puts Oregon and Washington at almost equal. One quick thing I'll add for Oregon for capital gains is they follow the federal rules when it comes to selling property. So you have an exemption of $250,000 in profit when selling a home for if you're single, and if you're married, you have up to $500,000. So you will not be taxed on those gains at the state level. Let's talk about an important tax that often gets overlooked, B&O tax. B&O stands for Business and Operations Tax. This is a tax on gross receipts, aka top line revenue, not your profit. So it's whatever you bring in. This applies to all businesses, but it also applies to 1099 contract employees. Previously, this tax was 1.5% of all gross receipts, just flat line across the board, doesn't matter how much you make, it was 1.5%, but it recently went through a revision this year, and now there are different tiers. So anything under $1 million in revenue is going to be taxed at 1.5%. From 1 to about 5 million is going to be taxed at 1.75%, and anything above that is going to be taxed at 2.1%. 1099 contract employees, you're probably going to fall in that first category. I doubt you're a 1099 contract employee making more than $1 million a year. If you are, good for you. But you're going to pay that 1.5% straight away to the state. No way to get around it. I find this an interesting tax because, you know, revenue is nowhere near profit. And as business owners, I know we have a lot of expenses. So it's always a bit of a bummer to pay that on top line revenue, but it is what it is. In Oregon, there is no gross receipts tax. There is no B&O, business and operations tax. However, there is a similar tax. It wouldn't apply to 1099 employees, but it is a net profit tax on C Corps, so it applies to a lot less businesses. We'll put those tax rates up here. If you own this kind of business, you'll pay that in Oregon. The very last tax to talk about is arts and daycare tax. In Washington, in Clark County, we don't really have anything like this right now. Of course, we have money that goes towards arts and school services, but that's all kind of wrapped up in property tax. Now in Oregon, this has been a controversial one the last couple years. This tax was passed under, I'm going to read it off here so I don't get it wrong, Measure 26-214, and it was advertised as tuition-free preschool. I've also heard a lot of people refer to it as a daycare tax, so that's kind of how I'll talk about it. The number of people who have personally had a conversation with me and cited this tax as a reason they want to move over the river as kind of, you know, the last thing that's setting them off is a lot. Probably 20 people have told me that they hate this tax and they want to move over because of it. It really is a matter of, you know, they've said they feel nickel and dimed about it, and they just don't want to pay for something like this that's really not applicable to them. It did pass with a yes from 64% of voters, so that is, you know, more than a majority for sure. It's a 1.5% tax on any income over $125,000 if you're single, or $200,000 if you're filing jointly. And there's an additional 1.5% tax, so 3% total, for any income above $250,000 if you're filing single and $400,000 if you're filing joint. So this is a progressive income tax is what it is, and it's taxing those who are making higher incomes. I'll also check this out. The ordinance allows the board to adjust the rate later to fully fund the program. An increase of 0.8% is scheduled for January 1st, 2026. That's gonna be a big tax. So there you have it. Those are the top 9 taxes you need to know about if you're gonna decide on living in Washington versus Oregon, Clark County versus Portland metro area. Of course, every situation is different, so consult with your CPA, do your own numbers based off your individual situation. If you need help buying or selling a home professionally in Clark County, Washington, myself and my team at Dubyne Realty Group, we'd love to serve you. Text us or email us. We'll have our contact information down below in the description, and we can't wait to see you guys again soon. Bye!